Before you retire, you'll need to make some decisions about your insurance. In this video, we'll walk through 4 important topics: life insurance, dependent insurance, accidental death and disablement insurance, and health insurance. Let's start with life insurance. If you have life insurance, your beneficiary will get a tax-free payment when you pass away. Your life insurance beneficiary may be different from your pension beneficiary and can be one person, several people, or an organization like a favorite charity. Can't remember who you named as your life insurance beneficiary? It's a good idea to contact your payroll department and fill out a new designation form with up-to-date contact details. Too often, we can't find the people our members chose, which means we can't deliver their payment. So, what happens to your coverage when you retire? Your life insurance continues in retirement if you had coverage when you retired and you start your pension right away. You don't need to do anything to keep it going. If you don't start your pension within 30 days, your coverage ends when you leave your job. Next, let's talk about your life insurance coverage. Your coverage level is called a class. Class 1 is the lowest, Class 5 is the highest. While you're working, your class is multiplied by your annual salary to determine your coverage. For example, someone in Class 3 earning $50,000 would have $150,000 in coverage. In retirement, insurance is based on a percentage of that $150,000. The percentage depends on your age. You can only change your class before retirement. If you'd like to do this, talk to your payroll department. Keep in mind that if you want to increase coverage, Canada Life will need medical proof of good health and insurability. The money you pay for insurance is called a premium. In retirement, premiums go up because your employer no longer shares the cost. Premiums come out of your monthly pension if you're a pension plan member, and coverage and premiums go down as you age. This chart shows when your coverage will reduce. At 73, you stop paying premiums, and a fixed $8,000 of coverage stays in place for life. If you want to stop paying premiums, you can reduce your coverage to $8,000 at any time. If you want more coverage, you may be able to convert the portion that reduces at retirement into a private plan. To do so, you must apply within 60 days of retiring. Conversion can be helpful if you want a higher level of coverage in retirement. With conversion, you don't have to pass a medical exam to qualify. If you want to learn more about the cost of life insurance, you can run an estimate in your online services account, or we can run one for you. And lastly, if you're retiring because of a disability or have a terminal condition, contact us to review your options. Let's move on to dependent insurance. Dependent insurance pays you, the member, a tax-free amount if an eligible family member passes away before you. Eligible family members include your spouse until they turn 70, your unmarried children living in North America until they turn 22, your children if they are totally disabled as defined by Canada Life, and if the disability began before age 22. At retirement, your dependent insurance coverage is reduced by half. If you want more coverage, you can convert only your spouse's coverage to a private policy at private rates with no medical proof needed as long as you apply within 60 days of retiring. You can't change your dependent's coverage after retirement. You can only cancel it and you can't reapply. Now, let's talk about accidental death and disablement, or AD&D insurance. Because your employer funds this coverage, it ends when you retire and can't be converted to a private plan. If you want AD&D in retirement, you'll need to look into private options. Finally, let's talk about health insurance. When you retire, the health insurance you had through work ends. To get health insurance in retirement, you'll need to research private plans and apply directly to the company you choose. CSSB lists a few options on our website, but we have no role in your health insurance in retirement. And that's it. 4 insurance considerations when planning your retirement. Let's quickly review everything we covered. Life insurance continues if you start your pension right away. Review your class and make changes before you retire. Coverage can be converted. You can choose $8,000 coverage at any time and stop paying premiums. In retirement, CSSB is your life insurance administrator. Dependent insurance is cut in half at retirement. Only your spouse's coverage can be converted. You can also cancel this insurance. Like life insurance, in retirement, CSSB is the administrator of your dependent insurance. AD&D ends at retirement and can't be converted. Look at private providers if you want coverage. Health insurance also ends at retirement. Look at private providers if you want coverage. Let's end with one final reminder. Double-check your beneficiary information, including contact details. It's a simple way to ensure your coverage goes to the people that matter most to you. If you have any questions, our member services specialists are happy to help.